Hey everybody, I've recorded this a few times, but now I have some examples just from today to show you this thought process. And what I want to show you here is how to look at the charts and actually understand what is going on. Because everyone teaches, this is my strategy and this and this and that. But wouldn't it just be better to know what's happening? Because if you know what's happening, then you actually know what you can do and where you should place entries and stops. So the first thing is, I'm monitoring a position, so I'm going to keep looking right over here. But the first thing is, when you look at a chart, it is a bringing together or an aggregation, bringing together of transactions. So these transactions occur or are shown as candlesticks. So if we look now, right, they bought it and now they're trying to sell it. So if I take my position and I flip it and I sell and hit the bid, I would trigger whoever bought during this bar, since there was buy orders, I would trigger the lows of that. So this is the second thing. Since we know these bars are just transactions, like showing every buy and sell order that happened the last minute in this case, we can see who's in long positions, who's in short positions, and where they are. It's like if you bought during this bar, you bought aggressively. And we know you bought aggressively because if we go to like a 15-second, you're going to see you were willing to pay higher, pay higher, pay higher. So they were buying and they're willing to pay more than Bitcoin's currently worth, which is why it goes up. What that looks like is this. So you can see we have an order book here. So we have offers, we have bids. So Bitcoin's sitting out there and someone's like, I'm willing to pay $90,030 for it. And then Bitcoin's sitting there and there's also a guy who has Bitcoin. He's like, I'm willing to sell it for $90,055. Notice there's always a difference. So there's a spread. It's the difference between this number and the number above here in red. So you have someone that wants to sell at a price, someone that wants to buy at a price. We know the buyers are aggressive when we see the buyers take the offer, meaning instead of buying and trying to fill at 90.20 in this case, they're go and buy at 90.65 and then 90.85, 90.95. They're willing to pay up. So imagine if you go to try and buy a house right now. A lot of people want to buy a house. So you show up and there's 10 other people. You show up and you're like, I'll pay what your asking price is. I'll pay 500 grand. And then the guy next to you is like, I really want this house. I'll pay 550. That would be an example of paying above the offer, right? And that's a really aggressive way to do it because you're like, I'll just pay whatever you want. And that's when you see charts go zoom, or housing prices go zoom right to the highs. So it's working the same way, not just in trading markets, but in the housing market. It will work in currency markets this way. It's going to work always like this because there's a bid, there's an offer, and there's buying and selling that's happening. So if you ever hear someone who's like, yeah, you can't trade currency markets because they're so manipulated by banks. I've literally had people tell me this. It's like, no, not true. Because we can see what they're doing. It's like they're buying here, they're selling here. Simple enough. Now, why does that matter? Well, if we know where there's buying happening, we also know where losing trades happen. So for example, if we go to a 15-minute basis, imagine with me, you're trading during this bar. At some point, you'll have an entry in this bar's range, and somewhere you're going to place a stop. It could be near your entry. It could be above previous highs. It doesn't matter. You're just going to put it somewhere. So if this is your position, you're good until we hit this. And you're like, uh-oh, I need to get out. And then you get out. Or let's say your position was this, right? You're good until we get above your entry, and then you have to get out. So since we have this red bar, we know they're short, and we know every time price goes up $1, more people are in losing short positions. So ideally, we want to go back through this range as fast as possible. So what's the fastest way price can do that? Glad you asked. It's called a kicking pattern, and it is a gap. So you're going to see this. I'm going to turn these indicators off just because we don't need them. It's not what we're doing here. This is the fastest way price will do it. It will simply open at the next price, much lower or much higher. So when we look at this range, you'll see we have 1, 2, 3, 4, 5 days. These 5 days worth of buyers because it was going up, because these bars were green. We know they were buying. They were taking the offer. So it's like, again, showing up to buy a house and they're like, I'll pay whatever you want, I'll pay. right? That's what was happening. And anyone that was trying to sell this short, they were just like, get me out of this trade. Like, I will pay whatever you want, whatever price you want to get me out of this position because it's not working. Because imagine if you sold down here at 77 and then all of a sudden you look at the price up here, 89.21. It's like, get me out. Whatever price you want from me, just get me out of this. I don't want to lose more money. So when this opens, right, all these guys, imagine you bought this 94.67, right? Price did trade there. Someone did buy there. Imagine you bought 94 and it's opening 78. What are you going to do? I'm going to sell. I'm going to do it really aggressively and I'm going to do it right now because I'm in this gigantic, like 94 to 78 in one day. That looks really bad on a P&L. Like really, like that's like being up 0 and down 10,000 like this, right? Get me out. So what do? Well, the day opens at 78.80. Anytime prices below this open, the sellers are hitting the bid and they're getting out at whatever price they can get. And then it goes boom, destroyed. So if we go to Bitcoin right now, I had a short position on. I'm actually going to have to reduce it potentially. We'll see. Just give me a sec. We go to Bitcoin and I flip my position short. Boom. Why? Why does that happen? It's like, well, what if you bought during this bar here? You're getting out down here, right? What if you bought during any of these green bars here? Well, once we're below those, you're also getting out. What if you bought within here? Below that, you're also getting out. So the way we trade is not, buy a gigantic position and just hold. The way we trade is, since we know this is happening, we try and cause losers. And then if the loser starts getting destroyed like this, we hold the open position. So at this point, my average entry, and this is going to be on the perp futures, so it's not going to line up with Bitcoin's exactly. It's designed to, but it may not. Oops, sorry, it's already pretty extended here. Whoa. So you can see my entry price, 90.95. So where was 90.95? 90.95. So that's right here. So notice buyer, I was that buyer. I actually tried to buy it. Breakout, right? Didn't work. Short. And then as long as we're below 90.95, I'm short, right? That's it. And then what do we do to add? We look for more losers. Here's this buyer in here. What just happened? They bought, and then below this, that buyer's got to get out. And if that buyer gets out, it triggers anyone that has, stop against this. They got to get out. Same with against this. Then we get all the way down into all this stuff, right? Anyone that bought above 89,817, these guys, they all have to get out. Destroyed, like destroyed. $65, not bad. And this is not stuff, we're talking about in hindsight. Like, obviously I just shorted that in real time here, but we've been following this move for the, last little while. So we saw this. We saw a new range start. So a broadening formation is simply a range of traders. So it's like they bought and then now they're selling. In this range, it's going to get bigger over time. And then you'll note, right? They sold, they bought, they sold, and then they're buying. What are they going to do? As we said, now taking some of these guys out. Anyone short in here against this pivot, anyone short against this, we're going to try and take those guys out. Boom, instantly they close their positions. So notice, we're going to be talking in terms of instantaneous entries versus I'm going to buy and I'm going to have a 600 point stop. And if I lose, I'm going to go cry about it on Twitter. No, we're not doing any of that crap. We are going to look for losers, right? So this right here, entering into a break, is something that needs to go instantly. This is why. Notice the 15-minute signal, which this 1 minute broadening formation here, it's a 15-minute inside bar. So if we're going to take an entry on the break of a bar, we have to make sure that we are tight stops. We're not going to be risking, like, I'm not going to buy here and put my stop here. That's not how this works. You take whoever was losing before. Okay, I'm going to buy it here, tight stop. At worst, maybe it's like this low, right? No wider. So if we were buying right now, which I'll try and do it just for fun. Here's the inside bar signal. I want to look at this price. So in this case, the 15-minute reversed and the 30 is a 2 going 3. So let's to be aware of that. I might have to flip it back short if it breaks, but this bid, if we look at it, so you see the offer 685. So if I flip my position long, and let's say I buy 20 contracts, watch what happens. Boom, anyone that was short just now, I changed the color. Now they're in a losing position, as well as anyone that was short during this bar, right? 1,000 volume traded, so a good amount of selling happened. So now they're in a losing position. Now they have to do something. And I'm trading with very small size, right? I'm not trading much, which is why, you know, I throw the first punch and then tight stop. If it doesn't work, I'll just flip it short and see if we can't go the other way. Because obviously, if I buy it and I go, boom, now you have to get out, or they're going to sell more short and then I have to get out, right? Now, if we're looking at this, I could buy more like here, boom, I just pushed it back up. So now I'm forcing them, right? Anyone trading in this market here, I'm not moving the Bitcoin price. This is a derivative, but this is a really good example of what we're looking for, right? We want to try and take these sellers underwater. And if that doesn't work, we might take these buyers underwater instead. And that's okay. Now, if we look at this, 655, I would want to sell 620. So if I sell 20 contracts, you can see I'm actually a little late. Boom. Now I took these guys under. So I'm tight stop. If it didn't work, I'll try and take it the other way. Now, the only reason we would take it the other way doesn't mean it's going to work, right? We actually see it. Wow. We're going to try and reverse it again. But it doesn't mean it's going to work. And this is a 1 minute. We do not suggest trading on this. But the only reason we will take it the other way is if we have conditions like, hey, the market's volatile. It's moving up and down 100 points every day. It's like, we got to trade both ways then. Because every day we're getting, you know, huge moves. But when the market's really flat, really not going anywhere, then the lower time frames, they become much less tradable. Because imagine, right, if we trigger a 1 minute group, like this 1 minute group here, we took them into a loss and then this happens. Imagine what happens if we take a weekly group underwater. It's like, what do they have to do, right? And we're going to try and, I do want to be short this market. So I'm going to try and sell short into this. And I want to be short because of the higher time frames, which we'll show you here if I can. So we go to the higher time frames. We go to the 60 minute. What's happening on a 60 minute basis? Pretty obvious. So we made some new lows, which tells us what? Whenever we make new highs or new lows, what does it tell us? It tells us these guys are all short and we just made the new lows. So anyone that was long before, if they have stops anywhere in this range, they're definitely out. And if they don't, their stops are probably somewhere else. Right? It doesn't matter to us where their stops are. But we know people place stops in where their entries are, or they place them against obvious levels. We take it out. So we're going to have people selling to get out of long positions below this, which is why you see it takes it out and goes, boom, drops really quick. And we can go to a 1 minute and you can see this. Watch what happens when you take this stuff out. It's like it takes it out and goes, boom, right through the levels. Then they retest it and then boom, more selling of long positions, as well as probably short selling, right? But then right here it reverses. So now everyone's short and anyone that was long, if they had a stop anywhere near price, they're out. So when we come back into that range, what's happening? Well, since everyone that was long, you know, the previous day, they're pretty much gone. Any of the day traders, they're definitely not long. They're waiting. As price starts making these higher lows in here, what are they doing? They're buying, right? Because now prices are going up. They can buy. But we also see short covering because everyone that was short in this, as prices go higher, they got to get out of their short. And that's why we see price do this. It's like everyone's long and then boom, now everyone's short and it comes back up and it goes consolidation in this case, right? There was some profit taking, some long buying. We get below all that as a breakout. Now, anyone long in that range, boom, everyone's short. Then it comes back up, consolidation. And then as a breakout, anyone short in that range, boom, consolidation. Anyone short against that, boom, consolidation. Anyone short against this stuff, boom, then consolidate, right? You can see it's over and over. We're either going to consolidate and change direction, or we're going to make new highs and new lows and change direction. And what that looks like on a big time frame is the 60 minute. Reversal, change direction, boom. Anyone long in this bar, they got taken out here. And then it triggers more guys to get out, which speeds price up. And let's see if we can't get another short position open. Or get more short. We'll see. Right now you can see it's inside 60. So this is really risky trading. I actually wouldn't suggest that. But when we're looking at this, everyone that's long gets out. And then right when this goes green, short covering starts happening. And then buyers start stepping in. And then boom, everyone that was short in this whole range here, they get taken out. And then they get taken out up here as well. And now everyone's long, right? We just made some new highs. It's like you had more than ample time to buy in here. So when this reverses here, it goes inside, sideways, break out to the downside. Anyone long in this range, we take them out to the downside. Now you can see the 60 changes color. So anyone short in the previous 60, they become a little bit in trouble here. We have a reversal on the 5-minute basis. We are in inside 60 minutes, so we are aware of that. But notice, we have this range here. Everyone short, reversal against them. Now what? We call this a 2-2 reversal. So we can identify the exact condition we are looking to trade. So if we go into our cheat sheet, 2 down, 2 up reversal right here. The break of that should go instantly because when price reverses, anyone short the previous 5 minutes, they are forced either to sell more or they are forced to cover. So the way we do our risk management is this. Entry, tight stop. And then once we get the winner, like let's say this works, hold as long as we possibly can because we know winners, right? If we take this short, we know this can happen, right? We just tight stop, boom, destroyed. Then maybe it pops up and you're like, okay, another one. Boom, you just added to it. And if we look at the 5-minute, we also know if we're wrong, price may completely go to the other side of the range. So the people who want to have a stop like this, if this signal's wrong, it will go outside bar and take this out. So like right now, I just flipped it short. Let's see if it flips red. And then we take out the lows of this or not. And we are trading an inside 60. So you can see this, right? Inside on the 30-minute, where this bar is currently inside of this. Dead in the middle on the 60-minute. So what we call this is consolidation, and it's really not the best to trade. So what this makes us more prone to is this, right? It tries the highs, we try to buy it, tries the lows, we try to sell it, and then it's gonna try and do this over and over until they're trying the highs, then trying the lows, and then trying the highs, and then it gets bigger. So if we look at like a 15-second, they try the lows, they try the highs, some lows, they try the highs again, right? You can see it's just back and forth, back and forth. All price discovery is, it's really simple, a 5-year-old can understand this. All price discovery is price making new highs and new lows. And what that is defined as is what we call a broadening formation. So price will trade in a series of broadening ranges where you're going to see lower lows, higher highs, lower lows over and over. Now, this starts once price is stuck inside a previous range. So you can see this is where it started as a consolidation and then a new high, new low. So if you're a breakout trader, this is what kills you. New high, completely destroyed because your stop's down here. Versus us, 2-2 buy. 2-2 reversal, sell. 2-2 up, maybe we try to buy it. 2-2 back down, we sell. Boom, right? We're playing the whole thing. When the range gets bigger, traders tend to get stuck on the wrong side because their perception hasn't changed with the market. Because over time, notice how these lines broaden and they get lower and higher over time. The perception of you when you're trading this, if you're like this, your perception is not that the range is actually expanding like this over time, getting bigger. Which is why you will make a little money, make a little money, make a little, and lose a ton, your whole account, right? We've seen things like GameStop, right? The funds that do mean reversion and they're like, oh, GameStop popped up. You know, it's from $0 to 10. Like, I really need to short this. It's like they short it and then destroyed. They have no idea. Destroyed. So they made a little, boom, their fund blows up on GameStop because their strategy was to make a lot of wins small versus small winners or small losers and a ton of big winners, which is how price actually works. Because over time, look at GameStop here. We go on a monthly. Notice what GameStop was doing in the series of broadening formation. New low followed by new high, right? This was lower high to this, but we did make new high because you can see, right? New high, new low, new high, new low, new high. If your perception did not change with this big range here, you were blown completely to smithereens and then new high. And we all know GameStop's probably going down here. It's just a matter of time. But you'll see it gets stuck inside. Notice the month that GameStop rallied, we have been stuck inside that for how long? 1,076 days. That is years doing nothing. Now there is movement in there that is tradable, but it's only going to line up with the series of new highs and new lows. You'll see new high, new low, new high, and then back stuck in the middle again. New low, new high, new low, new high, new low, slight lower low, slight higher high, new low. So it's just new lows and new highs over and over. And the bigger it is, when it makes this new low here and reverses, the bigger that range is. If we look up and left, the bigger your move's about to be. Like when GameStop starts racing through here from 5 to 10 to, it's like it's going to go to 16, and maybe everyone short in this range needs to buy at higher prices to exit that short position, which they did. That's what the funds did, right? Some were blown up, others were bailed out, but this is what's happening. So if we go to Meta, you're going to see new high, new low. It's a little bit stuck in the middle. New high, new low, new high, new low, boom, new high, right? Palantir, the baby of everyone here. IPO, lows, new highs, new lows, new highs, all the way up here. Google, recently on the month, new low, new high, new low, reversal, new high. And notice we are taking a range of losing short positions here. This is the range. We are looking for a color that is green against that range back through. And then we ideally trail our stops to the reversal, all these higher lows in here until it reverses. It still has yet to reverse. And we didn't see that just on Google. We saw it on SPY. Reversal in here. Notice new low, new high, new low, new high, right? This is just how it happens. You'll see it on a 5-second chart on Bitcoin. You'll see it on a yearly chart, SPX, back in the 1800s. It really doesn't matter. What matters is knowing by time and price what's happening. Use the yearly, the quarter, the month, the week, the day, the 60 to know exactly what's going on based on what I've talked about here. If you want more dedicated teaching, feel free to check out my channel. If you go to stratalerts.ai/premium access, we have a premium group, and we also have a lot of indicators and stuff. And what's the other term? Software. We have some scanners and things that allow us to find these conditions and trade them with tight stops and make winning trades. So if you're interested in checking us out, that's where you can do it. We will have stuff going on for not Black Friday, but Christmas/New Year's. So if you go to start here for free, you will get an email when we have our sales going live, as well as an invite to our private Discord, our public Discord, which also has some educational content and a ton. We have thousands of strat traders that think and talk similar to how I do. So if that rubs you right, we'll see you there. And if not, I hope you have a good rest of your day.